Before we start this video, do like and subscribe to our channel and not miss on any updates.
Friends, let's now have a look at another illustration. This is a very comprehensive question. I don't expect such a long question to come in the examination, but if you are comfortable with these kind of questions, trust me, you have learned this chapter the right way. So let's have a look at this question. From the following particulars extracted from the books of Ganguli, prepare trading and profit and loss account and balance sheet after making necessary adjustment. Now here in this question they have not given debit credit separately. So by reading each item, we must also identify whether it is a trading account item, P&L item or a balance sheet item. Where will it appear, right? Ganguli's capital account credit balance on 1st of April 21. This is the opening balance. Stock on 1st of April of 21. That is our opening stock or opening inventory. Sales 14,48,000 the sales during the year. Sales return will reduce from the sales. So here this is a trading item, this is a trading account item, this is a trading account item. Purchases and purchase return, we all know that. Then carriage inwards or freight inwards, which item is it? It's a trading account item. Then we have rent, P&L item, salaries, P&L item, sundry debtors and sundry creditors, the balance sheet items. Loan from Dena Bank Limited at 12%. Now these are called hidden adjustments. See, they have not given this as a specific adjustment. They have given some more information. But wherever you see this percentage, the one thing that should strike your mind is interest should be paid at 12%. Interest should be paid at 12%. Now on what amount? If there are no further adjustments given on this entire 1 lakh. If there are more adjustments given, according to the adjustments, you have to solve it, right? Then interest paid 4,500. Okay, so they have not only given the loan amount, they also have given interest paid amount of 4,500. So whatever is the interest due for the year or whatever is the interest payable for the year, from that you have to reduce this 4,500 that is already paid and balance becomes payable. Printing and stationery 17,000. Advertisement 56,000. All of these are again P&L item. Then interest received, this is our interest income. Cash with traders bank, cash at bank 40,000. Discount received, P&L income side. Investments at 5% as on 1/4/21. So when they again say investment at 5%, what it basically means is on 25,000 you will gain or you will get 5% interest. So 25,000 into 5%, 1,250. Okay, but sir, we got 7,250. Maybe there are more adjustments we need to check. Okay, then furniture as on 1st of April 9,000. Discounts allowed on the debit side will show on the P&L 37,700. General expenses 19,600. Audit fees 3,500. Fire insurance premium 3,000. Traveling expenses 11,650. Postage 4,350. Cash in hand 1,900. Then we have one more. See, deposits at 10%, 1,50,000. So for our total interest income, we have 10% deposits here and we have 5% investments here. So that should be our total income on the interest side. Now whatever we have received, that is 7,250, that we will account for as receipt. Balance will be accrued interest or interest receivable. Okay. Then drawings 50,000. Now where will we take this drawing? We will reduce from the capital. So by now we have split or we have identified various items. Now let us look at adjustments. First adjustment, value of stock on 31st of March is 3,93,000. So we will take this as a credit item on our trading account and on the asset side in the balance sheet. This includes goods returned by customers on 31st March to the value of 15,000 for which no entry has been passed in the books. Now what does this mean? This basically means is customers have given back some goods to us worth 15,000. Okay. Now what does this mean? Customers have returned goods worth 15,000. That cost of that goods of 15,000 is already included in the inventory valuation. So inventory there is no problem. Where is the problem? We have not passed entry in the books for returns. Means what? We need to record the entry. Record the entry means you will pass the return, you will pass the entry related to sales return. Now what is the entry related to sales return? You don't need to actually pass the entry, but for our understanding, we will say sales return debit by 15,000 to sundry debtor 15,000. Now what is the impact of this? Our sales return value will increase. So the value that they have given in the question of sales return 43,000, you will add 15,000 to that. That will now become 58,000. And what about the sundry debtors? From sundry debtors, you will reduce 15,000 because they have returned the goods and we have not passed the entry. So what you have learned in rectification of errors, that is what you are doing here. Okay. Purchases include furniture purchased on 1st of January of 22 for 10,000. Now be careful with two things. Number one, date. When did we buy? 1st of January. Sir, why did they give this date? Because you have purchased a furniture. So when you calculate depreciation, you have to consider what is the date of purchase. So that is one thing that they have given. Second, they have said purchases include 10,000. Means what? We have purchased furniture and we have added it to purchases. Is it the right thing? It is not the right thing. So how should we rectify that? Reduce from the purchases, add to the furniture separately. So as you read this adjustment, keep remembering where all this will have an impact. If you think you will not be able to recall or remember later on, what you do? Sales return. So sales return will have an impact in two parts. One is sundry debtors and sales return. Make a small note of it so that when you're solving the problem, you know I have to make these adjustments. Okay, then purchases also has a problem, we have to adjust that, and furniture also has a problem, we have to adjust that. Okay, so far so many things have come up. Then depreciation should be provided on furniture at 10% per annum. So on furniture we have one more adjustment that is related to furniture. So I am making these small dots so that we recollect when we do the problem. Okay, that is second one is for depreciation. Loan account from Dena Bank in the books of Ganguli appears as follows. Now what is the closing balance of loan account? If you go back and see, it says 1 lakh. 1 lakh is the closing balance. Now what are the transactions? 1st of April 21, balance brought down 50,000. So opening balance of loan is how much? 50,000. Then by bank 50,000. What does this mean? This means that they have borrowed more money, 50,000 during the year. When did we borrow? We borrowed on 31st March of 22. Now if you have borrowed on 31st March of 22, that is the last day of the year, on that you will not be providing any interest. Now practically what happens is, if you borrow money on 31st March of 22, one day interest you have to pay. Okay, but for our problem we'll assume that it is borrowed on the last date of the year and hence interest is not required to be provided, considering that the amount will not be significant. Balance carried down 1 lakh. Now in this entire thing, interest expense that you have to provide is on 50,000 for full year. So 12% is I think the rate of interest into 50,000, 6,000 is what you need to provide. Sundry debtors include 20,000 due from Robert and sundry creditors include 10,000 due to him. Means there is one party, he is also our customer, he is also our supplier. On the debtor side we have 20,000, on the creditor side we have 10,000. What is the net thing? Net thing is we have to receive 10,000 from him. Okay, so in the balance sheet when we present, what we will do, from this sundry debtors of 20,000, we will reduce 10,000 that is payable to him and we will show it as a net amount of 10,000. So debtors balance will reduce by 10,000. Okay. Interest paid include 3,000 paid to Dena Bank. So out of the total 6,000 that we have calculated, we have paid only 3,000, balance 3,000 is payable. Interest received represents rupees 1,000 from the sundry debtors due to delay on their part and the balance on investment and deposit. So we have received some interest. Out of the total interest received, 1,000 is received from debtors, balance has been received from investments and your investments and deposits. Now what does this mean? This basically means that what interest we have received. So here if you see, we have received interest of 7,250. Out of 7,250, how much is the income received from investments and deposits? Minus 1,000, that is 6,250. So what we have to do, we have to calculate what is the total interest and deposit. Now what you have to do, we have to calculate what is the total interest income that we should have received, how much did we receive, and balance is accrued or receivable. Okay, then provide for interest payable to Dena Bank and interest receivable on investment and deposits. Even if this adjustment is not given, assume this adjustment is not given in the question, even then you have to do these adjustments. Okay. Make provision for doubtful debts at 5% on the balance of sundry debtors. No such provision need to be made for deposits. Again, the second line, you don't generally make provision for doubtful debts and deposits unless specifically given in the question. So even if this line was not given, even then you will only make a provision for doubtful debts on the sundry debtors, right? Now we have gone through the adjustments. One by one we'll pick up the items. It is a pretty long question. One by one we pick up the items, we'll plot it at the respective places and do necessary adjustments or working notes. Now if these kind of questions come in the examination where you have to do a lot of workings, it is better if you can do working notes first and then come to the trading and P&L account and the balance sheet, or otherwise you can follow the pattern that you have been following. Start with trading, P&L and balance sheet, and respective working notes whenever needed you can do it. Now let's have a look at the solution. Again, leave a page full for trading P&L, in fact maybe 1.5 page because this question is slightly longer, then one full page for balance sheet, and then after that we'll do the working notes. Okay, so again, trading and profit and loss account, balance sheet. The first thing we have Ganguli's capital account as on 1st of April of 21. This is the opening balance, so we'll take this opening balance 540,500. So in the balance sheet you can have capital account opening balance as on 1/4/21. The amount that they have given 5,40,500. 540,500. Okay. Then we'll have drawings, we'll have profit or loss. So we'll leave some more lines before we take up any other item in the liability side of balance sheet, right? Then we have stock as on 1st of April. So this 2,34,000, it is opening inventory in the balance. It is the opening inventory to be taken on the debit side of trading account. So to opening inventory or opening stock, the amount that we have is 2,34,000. Then we have sales 14,48,000. So on the credit side you will take up the sales 14,48,000. Right? Now from sales, what do? We will reduce the sales return. So now the next item is sales return 43,000, and there was an adjustment for this. So less sales return, how much? 43,000 less sales return not recorded, or you can directly take 43 and 15 and write 58, or you can show it as two separate line items, right? So 1448 minus 43 minus 15, the net sales that you get is 13,90,000. So this is done. Sales return is also done. Please remember, this adjustment for sales return will have one more impact during sundry debtors. Then we have purchases 12,15,000 and purchase return 90,000. So you can take it on the debit side to purchases 12,15,500. Now the question had mentioned that there is some item of furniture which is recorded as purchases. That is why we had given a small tick here, right? So if you come down to the adjustment, it says purchases include furniture purchased for 10,000. So what we would do? We would say less furniture purchased 10,000 less sales rate less that, so minus 29,000. So how much is the number? 12,15,000 minus 10,000 minus 29,000, 11,76,500, right? So that is the purchases number. Then we have carriage inwards 93,000. This also on the debit side of trading account. To carriage inwards 93,000. Okay, so that is done. Then we have rent, okay, and we have other expenses. So we'll quickly scan through. Do we have any other items for trading account? So this side we have rent, salaries, debtors, creditors, loan, interest, printing, advertisement, drawings, deposits, cash, postage, traveling, fire insurance premium, audit fees, general expenses, discount, furniture investment. So we don't have any item for trading account. If you are sure, you can calculate the gross profit. If you are not sure, you can continue with the P&L account and come back to it separately or subsequently. Okay. Now when we come to trading account, of course we'll have closing inventory as given in the adjustment. Value of stock on 31st March of 22 was 3,93,000. This does not need any adjustment. So as it is, you will take up 3,93,000, and this also has to be plotted on the asset side. So somewhere we can leave some 4-5 lines and plot closing stock 3,93,000, or you can remember and subsequently you can post it. Okay, that is also perfectly fine. Then we have rent 28,500. This is a P&L item. So in the profit and loss account, you leave some space and you can start plotting to rent 28,500. 28,500. Then we have salaries 46,500. There are no adjustments for salaries. So to salaries 46,500. Then we have sundry debtors 1,20,000, and this sundry debtor has an adjustment also, right? We have to provide for bad debt, that is one. We have not recorded sales return, that is the second adjustment. So sundry debtors we will have in the balance sheet. We need a proper working note so that the balance sheet doesn't become clumsy, right? So working note, we can have working note number 1. Sundry debtors as given. What is the amount given? Sundry debtors 1,20,000. Now there is a sales return that is not recorded. If I record that sales return, will it increase my debtors balance or will it reduce my debtors balance? Sir, what is that question? It will of course reduce my debtors balance. So less sales return not accounted. How much was that? That was 15,000. So 1,20,000 minus 15, you have 1,05,000. Now sundry debtors balance has become 1,05,000, right? Now we have to calculate provision for bad debt. On what amount should we calculate? If you remember one of the adjustment, there is a debtor creditor adjustment also. That also we need to do. So when we come to that adjustment, we will complete this particular information, right? So sundry debtors 1,20,000, we will keep it aside for now. Sundry creditors, so debtors and creditors, there is a common adjustment. So if you come down, the common adjustment, sundry debtors include 20,000 due from Robert and sundry creditors include rupees 10,000 due to him. Then what did we say? We have to pay 20, we have to receive 20, we have to pay 10,000. So from the payable, we will remove that 10,000 and we will remove the 10,000 from receivable. Net receivable will become 10,000. I am repeating once again. You have a receivable 20,000, payable 10,000. Net receivable is how much? 20 minus 10, 10,000. So what do you need to do? From receivable, remove 10,000. From payable also remove 10,000. So net amount that will be left is 10,000 of receivable and nothing of payable. Okay, so this is one way to understand the logic. So that we have to remove. Less amount due to Robert. How much? 10,000. Now if you do this, what is the amount? 1,05,000 minus 10,000, 95,000. Now on this 95,000, we have to calculate the provision for bad debt because there are no other adjustments related to debtors. So provision for bad debt 5% will be 95,000 multiplied by 5%. Come on, take your calculators and do 4,750. So debtors for balance sheet will be 95,000 minus 4,750, 9,250. I am repeating once again. Debtors balance as given was 1,20,000. From that we will reduce the sales return which we have not recorded. So the amount becomes 1,05,000. And then there is a mutual owing. What we say, we have to pay Robert. Robert has to pay us. For that we will adjust 10,000. So net amount outstanding is 95,000. On this 5% bad debt provision is 4,750. So in the balance sheet we will show 90,250, right? Now what about this provision for bad debt? This 4,750 will also be shown in the P&L. So two things come from here. One is 90,250 in the balance sheet, and in the P&L you have to provision for bad debt. That was 4,750. That is 4,750, right? So that we have completed debtors. So we have completed debtors and provision for bad debt. So this adjustment for number 1 we have completely done. So no further adjustments is needed. Then sundry debtors includes 20,000 due from Robert and 10,000 due to him. We have adjusted the debtors. Now we will adjust the creditors also. So coming to the creditors balance, how much is outstanding? 74,000 is outstanding. From that 74,000 we will reduce what amount? 10,000 which we have to pay to Robert. So sundry creditors, we have 74,000 less amount due to Robert, 10,000. So you have 74 minus 10, 64,000, right? Simple and straightforward. Okay, so we are done with that. Now comes loan from Dena Bank. Again, the moment you see this loan, there are multiple impact. One, it will impact the balance sheet. Second, interest will impact the P&L. Then we have not paid the full interest, that also needs to be provided. So for this, we will create working note number 2. Loan from Dena Bank and interest. Okay. Now, opening balance 50,000, right? Interest at 12%. Sir, why interest? Interest at 12%, 50,000 into 12%, 6,000. Okay. Less how much we have paid. So interest payable for the entire year is 6,000. We have to pay 6,000 of interest to Dena Bank. Did we pay the entire 6,000? We did not pay the entire 6,000. Interest paid is how much? If you see the question, interest paid says 4,500, but there is one more information here which says interest paid includes 3,000 paid to Dena Bank. So we have paid only 3,000 to Dena Bank. We have not paid the full amount. Less interest paid to Dena Bank, 3,000. So interest payable is 6,000 minus 3,000. 3,000 is payable. Now this 3,000 payable is outstanding. Now this 3,000 of interest payable, it has two impact. Number 1, in the P&L you will add to interest expense. Sir, why are we adding to interest expense? Because we have not yet provided for this 3,000 of interest expense. The question says interest paid 4,500, that includes 3,000 paid to Dena Bank. But whatever is payable to Dena Bank, that we have not provided. Then second will show it as interest payable in the balance sheet. Okay, so two impact, one in the P&L, second in the balance sheet. Now come to P&L, to interest expense. If you look at the question, interest paid is 4,500. Is this 4,500 only my expense? No. So 4,500 in the inner column, add interest accrued on Dena Bank loan, right? 3,000. So 4,500 plus 3,000, 7,500 is the interest expense. Now this interest accrued on Dena Bank, immediately do the second adjustment also. Interest payable on Dena Bank loan. So why immediately? Otherwise you will forget and your balance sheet will not tally. Okay. So that is done. So interest paid we have taken care. Then printing and stationery 17,000, no adjustment. Then advertisement 56,000. There is no adjustment. Then interest received 7,250. Again, for that we have to prepare a detailed working note because we have multiple investments, and from that we would have received the interest. So now we have interest received as 7,250. Now where all will we get interest from? First, we will get interest from investment at 5%, and this is outstanding in 1st of April of 21. Then we have deposits at 10% from 1st of April of 21. So here also we will get 10% interest, right? Now what is the amount received? 7,250. Now if you carefully see, or if you remember, in one of the adjustments that mentioned that we have received some amount from customers. See, this 6 is completed, this 5 is also completed. Now 7, if you see, interest received represents 1,000 from the sundry debtors. Now what it basically means is 7,250 that we have received, That 7,250 whatever we have received, out of that 1,000 is received from customers, balance 6,250 is received from investments and deposits. So in our working note, when we calculate working note number 3, interest income, okay, interest on deposits, what is the amount, what is the rate, what is the interest. Now amount of deposits is 1,50,000. What is the rate? 10%. So 10%. So how much will we get? We will get 1,50,000. We'll get 1,50,000 multiplied by 10%. You can do it on a calculator. 15,000. Then interest on investments. How much is the investment value? Investment value is given to be 25,000. So 25,000. Income is 5%. On 25,000, how much is 5%? 25,000 into 5%, you get 1,250. So what is the total? 15,000 plus 1,250. 16,250 is the total interest income from investment. Apart from this, how much income did we receive from customers as interest? 1,000. So if I add interest from customers 1,000, how much will I get? 15,000 plus 1,250 plus 1,000, 17,250 is my interest income to be shown in the profit and loss account. That is one way to calculate. Another way to calculate is total interest received, what they have given to us in the question is 7,250. Okay, add interest due, add accrued interest on investments and deposits. Sir, how much is the accrued interest on investment and deposit? See, total interest on investment and deposits is how much? Is 15,000 plus 1,250, 16,250. Basically what we have done, we have added these two items. This is the total amount that we should have received from investments and deposits. How much did we receive? We received 7,250, but 1,000 is from customers. So from these investments, we received only 6,250. Okay, this is your 7,250 minus 1,000. Okay, so what is the accrued interest, or what is the interest that we have not yet received? 16,250 minus 6,250, 10,000. So the way you have to understand is 7,250 we have already received totally from customers and investments. How much we have not yet received? 10,000. So total becomes 7,250 plus 10,000, 17,250. So either you can do it the first way or you can do it the second way. Both of them are okay, right? So how much is the interest income for profit and loss account? 17,250. How much is the balance sheet amount of interest not yet received? That is 10,000. How did we get that 10,000? 16,250 total interest, 6,250 what we have received, 10,000 that is receivable. So if you do the second method, you will calculate both of them, both the P&L item as well as the balance sheet item. So in P&L we will show 17,250 by interest income, working note number 3, 17,250, right? And in the balance sheet we will show interest accrued on investment and deposits 10,000. Okay, so that takes care of interest part as well. So I have covered interest fully. Cash with Traders Bank 40,000, balance sheet item. So cash at Traders Bank 40,000. Then discount received 14,950. So this is also done. This is also done. Discount received 14,950. So in the income side you will take by discount received. How much is the number? 14,950. Okay. Then Investments at 5% as 1/4/2021. So this you will show it in the balance sheet. Investments. Investments, how much? 25,000. Now you may have a doubt, sir, why did you write investment first, other items later? See, as you practice, you will have a particular way to present the balance sheet. So normally, first you will present fixed assets, then you will present your investments, other non-current assets, then you will present your inventory, debtors, cash in the order of liquidity. Okay. Even if you write in a different order, you will get the marks. Don't worry. But try to maintain the order as much as possible, because when you become chartered accountants in the future, this kind of professionalism is expected from you. Okay, so investments 25,000, then discount receipt we have already considered, investments adjustment done, furniture 9,000, and there are two adjustments. What are the two adjustments? One, purchases, second, depreciation. So let us get on to that. Working note number 4, furniture and depreciation, right? So what is the opening balance? 9,000. Add purchases on 1st of January of 22, 10,000. Total 9,000 plus 10,000, 19,000, right? Now depreciation, this will be for 12 months, but for this 10,000 you will have depreciation only for 3 months. Why? We purchased on 1st of January. So January, February, March, only 3 months depreciation should be provided. So how much is the depreciation rate? Depreciation they have given 10% rate. So what is the amount? 9,000 multiplied by 10% multiplied by 12 divided by 12. Or you can just say 9,000 into 10%. This is 900. How did we get this? 9,000 into 10%. Then 3 months, 10,000 multiplied by 10% multiplied by 3 divided by 12. So you get 250. So this is 10,000 into 10% into 3 divided by 12, 250. So what is the total depreciation? 950 plus 250, 1150. So depreciation amount, right? So depreciation is 1150. This depreciation will come in the P&L on the debit side. So write down to depreciation on furniture. This has come from working note number 41150. Okay. In the balance sheet on the asset side you will have furniture. Opening balance 9,000. Add additions 10,000. So that will give you 9,000 plus 10,000, 19,000, less depreciation of 1150. So 19,000 minus 1150, you have 17,850. So 19,000 minus 1150, you have 17,850 as the closing balance of furniture. So furniture also we have taken care of. Then discount allowed 37,700. So on the debit side, to discount allowed, there are no adjustments, 37,700. Okay. Then general expenses 19,600. General expenses 19,600. Then audit fees 3,500. Audit fees, not audit fees, audit fees, how much? 3,500. Then fire insurance premium 3,000. Now here they have not given information about what is prepaid, what is for current year, what is for next year. So entire amount will take as expenses for the current year. So to insurance 3,000. Then we have traveling expenses of 11,650. Traveling expenses of how much? Of 11,650. Okay. Then postage and telegram 4,350. To postage 4,350. Then cash in hand 1,900. This will come in the balance sheet. So down below you can write cash in hand 1,900. Then deposits at 10%, 1,50,000. 1,50,000. On this interest and on this accrued interest we have already considered. Okay, then drawings 50,000. So this goes off from here. Capital side less drawings. How much? 50,000. So we'll reduce 50,000 of drawings. Then, so we have considered all the information in the question. Let us quickly run through the adjustments to see if you have missed something. Value of stock we have considered. Sales return also we have considered. Then purchases include furniture. We have done both the adjustment. Depreciation we have provided. Loan account from Dena Bank. We have already added the interest part. We have already computed the interest part. Sundry debtors adjustments we have done. Interest paid we have already adjusted. Interest received from debtors and all we have already considered that adjustment. Make provision for doubtful debts at 5% we have already done. Provide for interest payable to Dena Bank and interest receivable, that also we have already done. So we have done all the things. So now one by one, first let us calculate the gross profit. 13,900 plus 13,90,000 plus 390. So credit side is higher, it will be a gross profit. So if you do 13,90,000, 1390 plus 393, you get 17,83,000. So this plus this, 17,83,000 right on both the sides. Then 1783 minus 234 minus 1,176,500 minus 93,000. If you do, we get 2,79,500. We get 2,79,500 to gross profit. Carry it down. 279,500. 279,500. Okay. So this is the first part. Then the second part, by gross profit brought down. How much? 279,500. Then we have interest income, discount received. Then we have lot of items on the debit side. Now here, so now coming to the profit and loss, on the credit side we have some item, on the debit side we have some item. So what you need to do is we need to see which side total is higher. Now by just looking at it, we can't make out. Of course, I have the advantage of just using the Excel and calculate it in a second. But what you have to do is you have to first total it up. Okay. So on the debit side, let's do the total. 28,500 plus 46,500 plus 4,750 plus 7,500 plus 17,000 plus 56,000 plus 1,150 plus 37,700 plus 1,9600 plus 3,500 plus 3,000 plus 1,165 plus 4,350. We get 241,200. 241,200. Okay. Now what is the total of the credit side? 279,500 plus 17250 plus 14950, 311,700. So here also you'll write 311,700. Debit side is less, credit side is more. We have profit. Okay. So to net profit, 311,700 minus 241,200, we get 70,500 as the net profit. Okay. How much? 7,500. That what will you do with that? You will add here. Add to net profit 70,500. In the outer column you have 540,500 minus 50,000 plus 7,500, 561,000. So if you do the total, you can do it on your own. Total of the liability side, we get 628,000. Of the on the asset side, we are getting 728,000. So what did we miss? If you see the difference, there is a difference of 1 lakh. And what is that 1 lakh? We said we considered, but we didn't write here. That 1 lakh is loan from Dena Bank. 1 lakh. If you write, you get 7,28,000. Right? So pretty long question, pretty comprehensive question. If you are able to handle these type of questions on your own, examination questions will be very easy for you. You can easily score. If it is for 14 marks or 15 marks, you can score 15 out of 15. Sometimes you get a 20 mark question, you can 100% score 20 out of 20. Now in examination, sometimes you may make some adjustment mistake. For example, you made a mistake in, let us say, just for our understanding, you made a mistake in calculation of this number. Okay. Instead of considering 6250, you have taken 7250 here. And this number went for a toss. Even if you did this one mistake, you will lose maximum 3 to 4 marks. because your interest amount is wrong, your interest receivable amount is wrong, your net profit is wrong, and your capital account final balance is wrong. But for remaining all the adjustments, you will get full marks. So even if you make one adjustment mistake here or there, don't worry about it. Complete the full question. Now, if that mistake would have happened, your balance sheet still tallies. Why? Because you are making the adjustment at two places, so your final number will automatically tally. Okay. So again, I'll correct it back. It is actually 6250. And with proper practice, this is one type of question. If you do calmly in the examination, you can easily score at least, if it's a 15 marks question, at least 10, and if it is a 20 marks question, at least 15, right?